What EMAs are those?
Yeah, I'll tell you. I'll tell you the AMAs and how I use them. All right. It's one of my favorite pairs. All right, let's go over Fibonacci. I know you might have seen a lot of garbage online about Fibonacci. I just want to tell you the only Fibonacci trade to take is the 61.8 retracement. Yeah. So first, you want to look at the trend. The market is trending. This market is currently in an uptrend. You see this? The market is currently in an uptrend. So you want to look for ways to get back into this market long. You don't want to counter the trend. Rule number one: never counter the trend. Don't ever counter the trend. If you counter the trend, your trade becomes 50-50. Okay. So if you know the trend, first thing you want to do is know the trend. Once you know the trend, then you want to get back in the trend, either long or short. This market is an option. This is the trade I called yesterday, but I didn't personally take it. So I showed Fibonacci. Wait, let me 1 second. Let me push all this out. Whoa. So I showed Fibonacci. In Fibonacci, we have 3 key retracement levels. The 2 key retracement levels is the 61.8, the 50, and the 38.2. So, but the most accurate one is the 61.8. It's everywhere in the market. One thing I like about the 61.8 is that you can place a trade with the 61.8. Once you get a rejection of the 61.8, you can place a trade with it, and you can be risking a 30 pips to get 100 pips trade. So that's one thing I like about the 61.8 trade. So this is how I show the 61.8 retracement. First, I want to see the market. Like if the market is on a downtrend like this, I want to look for a way to get back in short in the market. So if the market is on a downtrend like this, I draw my Fibonacci. This is the trend. I draw my Fibonacci from here to here. Then I want to see the market rally up to the 61.8. I personally don't like the 50, except I'm drawing the bad pattern. That is where I use the 50 and the 38.2. But I just personally like the 61.8 because it's the golden ratio. It's pretty much the most accurate ratio in the market.
You said it's the golden ratio.
Yeah, it's the golden ratio.
Okay.
So I love this 61.8. So once the market goes to 61.8, that doesn't mean you take the trade. Once you get a 61.8 retracement, you want to see a rejection of the 61.8. And I'm going to show you what a rejection means. You want to see a rejection or a high possibility candlestick reversal formation, like the evening stars, the engulfing candle, pins to the upside.
Okay, so we wait for price to hit 61.8, but that doesn't mean you enter the trade. Now you look at other confirmations like a reversal pattern.
Yeah, like a reversal pattern. But you want to see a rejection, and I'm going to show what a rejection looks like. I'm going to show you a one we traded yesterday, and we caught over 200 people trading that particular one.
Okay.
But I didn't call it in the signal group. I called it for my friends and my students. So here's it. The market is where? It's in an uptrend. You see? Yeah. This is what I did. Fibonacci, see swing low to what? To the swing high. What do we have here?
61.8 rejection.
61.8 and a reject. This is a rejection. See too many candles dancing up and down. Look at it. You see this? This is the clean rejection. My stop loss want to be after the rejection, few pips up below the rejection. My stop loss could be 36 pips, or I can bring it down to below the 78.6. Then if I know I'm risking over 70 pips, I want to go in low, very low. The market is always going to be here. So if I know I'm risking over 60 to 70 pips, If I'm risking 60 to 70 pips, I want to go in low. Okay, but if my stop loss, like here, our stop loss was around here because it has rejected here and I don't think it's coming back down. So we got in here. Well, our stop loss was here and we got in around here. This particular candle, this candle, this is where we got in. And you see what happened?
Yeah, 200 pip move.
Yeah, 200 pip move. No drawdown. Straight up move. No panic.
That's amazing.
Don't panic in the market. Straight up. It moves up. Now, what you do is just move your stop. Immediately move to this side. It broke this high. Yeah. It broke this lead high here. What you do, you just move your stop into your entry. Slightly above your entry. You moved up, move over 100 pips. Move your stop. Just follow it gradually.
And right now, what you're talking about is a trailing stop loss. For the people who have no idea what that is, that's your stop loss that you're moving while your trade is in profit. So when those candles start going up, you want to lock in the profit you already made. You want to move your stop loss.
Exactly. So you see, this is a 61.8 and a clear rejection.
Mm-hmm.
You see it?
I see.
Off it alone, you bank over 200 pips of this 61.8. Do not make it. Do not complicate trading. Just make it simple for yourself. So this is it. This is what I mean by rejection. You see the rejection, and it's on support level. You see the support is going back here.
Now, can you show real quick how you find those zones, those support and resistance zones? Because that was drawn there before you even pulled up the fibs.
Yeah, I draw it. I'm gonna show you how I do it. Yeah, but let's let me make this 61.8 very clear first. Okay. Everyone understand what I mean by the 61? Everyone understand how to draw the 61.8 retracement?
If you don't, go ahead
y'all
and
understand. Look for more examples.
Unmute your mic if you don't, or you can chat in the chat box. I'll monitor it. Everybody,
feel free to ask any question. If you don't see the setups, you don't trade. No trade if no setups. Look at this. Swing low, swing high. What do we have here? 61.8 rejection. You see it? 150 pips. Your first take profit is at the 23.6. The second take profit is at the 0 level. Off this Fibonacci, you'll be eating up good. And all you do is you risk around 30 to 50 pips. So my stop loss will be here around 23 pips to catch over 160 pips. Let me see what we'll have there. Yeah. So if you swing out or swing low, if you want us to look for more examples, you can still go over something. If you don't see it, no trade. You wait for it. If you don't get 61.8, no trade. Swing high, swing low. Look at this. Swing high to swing low. What do we have here? 61.8 rejection to the upside. And this market was gone for, this is where we got in at the 61.8. It's gone for over 600 pips.
Sheesh.
If you're moving your stuff, if you're riding it all up to this side, trend continuation is what you're looking for. Look for a way to get back in the trend. Yeah. So maybe we'll move over to the next thing. Maybe we'll move over to ABCD.
Hold on. Before you move on real quick, I'm going to unmute Cassandra. Cassandra, are you there? Unmute your mic on your end. I muted you out. Because I want to hear your question and see if we can get it clear. No?
All right, Kat, I think it's only you that can unmute her. Unmute her.
All right. Here goes nothing. All right, I'm gonna unmute everybody then. All participants are unmuted. That's weird. Because everybody should be unmuted, but she's still muted.
Hello?
Cassandra, what's up? Can you hear me?
I can't hear you.
Amazing. So, what's the question that you were asking?
Like, I know how to draw the Fibonacci, but I don't know what those numbers mean. Like, I don't know.
Now,
I don't know how to use it, basically.
Okay, Prince, do we have to know what each number means, the percentages?
No. Just use what I tell you. Just make trading simple.
Okay.
The only Fibonacci retracement you should pay attention to right now is the 61.8. You see, the market is on a downtrend. You see this?
Right.
The market is on a downtrend. Look at what happened. This is the only setup I have here. I draw my fibs from swing high to swing low.
And you
What
wait
do I have here?
61.8 retracement.
What happened?
That's beautiful. Oh, wait.
So simple.
Woo.
Without any drawdown, no panic, no emotions attached to this trade. It moved over 200 pips in one candle. 280 pips in one candle.
What EMAs are you using?
Now, I'm going to tell you how I use the EMAs and what I use them for. We'll get to that.
Okay.
I use them for breakout trades.
Awesome. So I think that's a little bit more clear, Cassandra. You don't really, I mean, you can YouTube them, but 61.8 retracement is what to look for.
Okay.
That's all you look for.
Okay.
The market is on a downtrend. You draw from swing high. Look at this, from swing high to swing low. What we have here? You see this? This candle is called a railroad track.
Right.
Yeah, what happened? 61.8, 170 pips drop. You dropped a lot more if you're patient enough to wait for it. All right, so we'll move over to the next class. Yeah, if you want us to move over, type Y. Let me get it, Y. Type Y, yes.
I'm good. Awesome.
Yeah, awesome, guys. So let's go over to how I trade and use the EMA. I use it for breakout. I use it for trend continuation. You don't want to ever counter the trend, are you?
That's what I was just about to ask, bro. All your trades are continuation trades. They're never like
reversal. I trade reversal too, but I want to see a good rejection before I trade the reversal.
I got you.
Yeah, I want to see a good rejection. If you're trading a reversal, you might end up losing that trade because sometimes if you're trading a reversal, the market might end up not moving much. But if you're trading a continuation, you can ride that trend for as long as it lasts. The trend can continue riding for like 2-3 months, and you can still be in the trade.
Amazing.
Or it can move for a week or more, and you can still be in the trade. So let's go over to the breakouts and how I trade them. All right, this trend line. See this trend line?
Yeah.
What makes this trend line accurate? You see the bounce, the bounce, the bounce. Some of the candles close below. We don't have a trade out here. You see, until it breaks and close below If it's trend continuation, it comes back. Sometimes it comes back to retest. Sometimes it moves immediately. Otherwise, you can still call this a flag. You see it?
Yeah.
Yeah, this trend line can still serve, but professionally can call it a flag. You see, what is a flag? See this flag here on this trend line? You see, we don't have a trade until it breaks and retests. My EMA can cross before the break or after the break. But once the EMA cross, like I use this EMA, once the EMA cross to the other side, I want to look for patterns to get in the trade long or short. Now the EMA cross to the downside here, right? So I want to wait for this trend line to break and retest. The market to break this trend line and retest. See what did the market do? The market broke the trend line. See the retest?
Mm-hmm.
Break, retest. My stop loss comes at the middle of the flag, which is 33 pips. My first take profit is the next structure, 140 pips. Then I'll write it down. I'll move the other position. I'll throw the stop. I'll move my stop into profit. I want to see this moving up. Once the market breaks, I want to see this moving average cross. You see crossover.
Okay.
So if I'm waiting for the market to go down, like if I want the market to drop, I want to see the market cross to the down. I want to see the EMA cross to the downside.
Okay.
If I'm looking for longs, I want to see the EMA cross to the upside. And the EMA is the yellow is 21 moving average. 21, simple, and it's closed.
And the other one was the exponential one.
Yeah, exactly.
You know, it's interesting. I was looking at it and I knew it was a 21 just because it looks like my chart. Only I use different, the MA method's different. But what I wanted to ask you is, so you're saying that you won't enter at the top of the cross, you'll wait for it to break and retest first on a downtrend?
Break. Yeah, break and retest. Sometimes it breaks. If it's a trend continuation, you don't really have to wait for the retest. Sometimes it moves immediately. But if it's a counter trend, you wait for the break and retest before you go in. Sometimes I do pendings. So you see the line is the exponential moving average period of 8. So that is it.
Amazing. That makes total sense. So trend continuation, that's my kind of language. I don't want to go against the market ever. So we wait for the EMA to cross when we see a flag pattern setting up. EMA 8 crossing 21, it breaks the trend line. But for triple confirmation, wait for a retest.
Yeah, exactly. And you're in.
And you're in.
Okay. So that is it. You can see it over and over again in the market. You see it here, but the market did not move for long. Draw my trend line.
I see it.
Wait for the break. Moving average cross. And it dropped for a few pips. Probably I'm gonna get stopped out in this because I'm immediately move down, move my stop into profit. Or I'll close after this head and shoulders here. Inverse head and shoulder. So I'll still pay attention to all this. So let's look for more flags, more examples of how to trade the EMAs. You don't want to ever counter the trend.
All right. I got a question real quick.
All right.
To establish a trend, which time zone would you look at for you to say, okay, this is a true trend?
Yeah. First of all, I start with the monthly. From the monthly, I go to the weekly, go to the daily. Then I go to the H4. But I use the daily and H4.
Okay.
I'm gonna use the H4, except I see a monthly close, like at the end of the month. I want to see how the monthly candle close. If you have an engulfing, if you have evening stairs, I know the next couple of months the market is going to be going up or it's going to be going down.
Gotcha.
Yeah, or look at the monthly. Look at this. I draw my fibs from swing out to swing low. This is the monthly, right?
Mm-hmm.
Yeah, you see, this is 618 retracement.
Sheesh.
To the upside.
Sheesh.
So all I'm looking for now for the whole of the month
is
for
selling.
the way to get back into the market down. I don't want to go up.
Why would you?
Exactly. I don't want to get hit.
Dang.
That is it. That is when I go to the monthly and the weekly.
I just had a huge aha moment. Whoa. Whoa.
So that is it. Yeah, look at this now. You see this?
Yeah, if I know this is going down a month.
These are my kind of trades.
Yeah, that's beautiful.
This is my kind of trades, bro. My kind of setups. You see, bounce, 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 break, retest.
I'm in there.
Boom. No drawdown. What happened? It dropped for 3 weeks. For the standard, you know how many pips you be up here?
1,300 pips easily.
Exactly.
No drawdown at all.
Drawdown.
Whew.
So that was it.
I got a quick question because I know this will get some people too. All right, we see that blue reverse, that upside down hammer. That pin. Nah. Let's go down when it broke out.
Yeah.
When would you decide to enter the trade?
At the close of this candle.
At the close of the blue candle.
Exactly. You want to wait to see how the candle closes. Do not get in before the candle closes. Because sometimes you see it forming this hammer and this inverse hammer. Before the candle closes, you see it form another candle.
Yeah.
And you're already in the trade. Then you get your blue card.
You just got to be patient.
Yeah. Trading is patient. So you get it?
I got it.
Any other question?
Hey, Prince, can you do an example? I don't know if they can actually talk, but he's been asking in the chat about that that EuroCat, and that's kind of what I was seeing on that.
Yeah.
If that's what it's doing right now, because I was telling him to wait to the trend break.
EuroCat. I will live in our class. The EuroCat. I was about to get in the sell, but I missed my entry. I don't chase trade. If I miss it, I miss it. I wait for another one. See the bounce, break, retest. Should have been my entry. I think I should be 17 pips up. Then going over to the lower time frame. This if I miss this trade, like I saw the trade, I woke up this morning and I saw the trade here. It was on 61.8 retracement. I would have been in good profit.
Oh my God. That's so
it. I missed this entry. And I left the market. Like I've seen the breaks and all of that. But this would have been the perfect entry for me. You see the railroad track here?
Mm-hmm.
That candlestick formation. And this would have been my entry here.
So that entry would have happened even before the breakout strategy.
Yeah. That's why I like Fibonacci. It happens before the breakout strategy. So you see, I would have been 50 pips up. My stop loss would possibly be in 10 pips in profit now. Why I allowed us to get hard. If the market close against those that are waiting for the breakout, you see this? The market can decide to come back up here and come down. If it comes back up, I have nothing to lose. So I missed the trade here, and I didn't bother to get back in.
Amazing.
Yeah, I saw it.
You missed the entry. Leave it alone. There's plenty of others.
Yeah. And I don't want to get back in. I don't want to look at it. If I look at it, I'll be tempted to get back in. Yeah. So look at this. You see this? See the bounce. The break to the upside, the retest, and you're up 100 pips. So this is the break, the retest, and the 4 pips. I saw this yesterday. Yeah, and ECAD is going to drop a lot more, but it's always good to get a good entry, then protect your profit. So that's that for ECAD. Any other question about the breakout?
All right, you guys can use the chat if you have any questions right now about breakout strategies with the EMAs and trend lines.
Yeah, if you have any question about the breakout, so yeah, so we'll go over ABCD and we'll go over the ABCDs and the head and shoulder patterns. Any question?
Anybody?
Anybody? All right. I believe we're good.
Yeah, we're good.
Let's go. Yeah, let's go over the ABC. AB equals to CD patterns. Leave. Or A equals to CD patterns. All right, this is how AB equals to CD patterns works. Let me look for an empty chart. See, if the market is on a downtrend, do not count out the trend. Always remember that. Rule number 1. If the market is on a downtrend, see this? The market is on a downtrend. I want to see a pullback, something like this. So I want to see a pullback to the upside. This is the pullback, and this becomes the impulse leg, and this becomes my A. That's my text too. This becomes my A. A. This becomes my A. Don't like this color. This becomes my A. And the retracement. This pullback. You see this pullback? This pullback can be anywhere. It can be 38.2, can be 61.8, can be 78.6, and it can be the 50% retracement. So for this example, we're using the 50% retracement. Swing low, 50% retracement. So once you get a valid retracement like this, your ABC, your AB equal to CD pattern is only complete once you get the D leg. This is your impulse leg. This is your A. And the retracement is your B. Retracement is your B. And you want to get a correction. Possibly be your C. Your C. Your C, and now you're looking for your D. If you get your D, you want to go in short. This is your D. And I'll show you why EN dropped yesterday, and I'll tell you, and I called the EN trade. I called the EN, we cut, I'm still up over 100 pips or so, or more. Should be up over 160 pips on EN. This is your D. You see? This is your D. But for this D, what you want to see is this. Why it's called A equals to CD pattern is this. Because once you get your AB, you get your C. Your AB is the same with your C to D leg. What you do is you pick this trend line, you hold the control button, you pick this same trend line like this. You see? You drop it here. And once the market gets to this place, it will terminate. AB equals to CD pattern. Once the market gets to this place, you start seeing rejection. So you understand this is your AB equals to CD pattern.
Yeah.
So I believe if we go over the examples, you understand what I mean. But I believe you get all of this. You understand how I drew. And now you see the market is giving you an opportunity to get back in short. Once it gets to the D, you continue riding trend down. You see, it's in a downtrend. Now you get a bearish ABCD. If you get a bullish ABCD here, you don't want to take it. It's a counter trend. Or if it will move, it will not move for long. But a bearish ABCD on a downtrend, these are the kind of things you want to look for in the market. So let's go over examples. Let's look for examples in the market. think I shaded one recently. AB equals to CD balance. Or GJ. GJ is like my favorite. Okay. G. Wait. Let's go over to H1. Yeah. Gotcha. Yeah, she goes. Yo, exactly. Yeah, hold up 1 second. Let me take this call. Hello, Baba. Yeah, the guy told me saying around I think say no day house saying around 2 to 3 hours now go figure out. This is see the market is what is going down on the downtrend. Yo man, I'm kind of busy now. Hello? Yes. I should send it. All right, tonight I said it. Yeah, yes, sir. Okay. All right, this is it. Oh, sorry. What is this? I draw from here. You see this? You see from here to here. What do I have here?
61.8.
61.8.
Yeah.
What I do first is I write this down. I write this down for 100 pips or so. Can be for 80 pips because I like to take a profit the zero level first. Then if you break the zero, then I'll move my second position. I'll move my stop and profit. So I write this up. Now I have my first trade, 61.8 as my first trade here. So I'll be good here. The AB equals to CD. Now we have a 61 point. Now we have a valid retracement. All you do now is to draw from your impulse leg. You see from the 100 to the 0.
Mm-hmm.
Then is either you pick it like this, you take it, don't change anything. Pick it as the same, pick it the way it is. Then drop it here.
That's crazy.
Drop it here. You see it?
Yeah.
Immediately got there. What happened?
Rejections.
Boom to the upside. Now you see this lead support here. You don't just want to take the trade because you completed ABCD patterns. You also want to see rejection. You see this?
Huge support area. Yeah.
Yeah. Exactly.
Huge support zone.
Yeah. Exactly. So I can decide to take this out. Now you see, you go to this place. I got rejections, and I'm up 130 pips. This is ABCD. I can look for more examples in the market and show you. More examples. Yeah, let me show you the one I traded recently. EN. Traded EN last night. Yeah, you saw the, look at this. You see the breakout, see the EMA crossover. See the breakout. I draw my trend. Let me take out this Fibonacci. See the breakout. See the EMA cross to the downside. So this is what I saw this in ABCD, but I chose on lower time frame. So now you see the market is on the downtrend. You see this?
Yeah.
The market is on the downtrend. What did I do? AB equals to CD. This is way past there. This is way past there. Yeah, this was when I called GN short. I know it's going short after the news. but this was close, but I still counted as ABCD pattern. After I got this rejection here, I drew my trend line. Here, and after the break, when the daily candle closed after the break, I knew it was a confirmed downtrend. Downtrend was confirmed, and I think I'm still in it. I closed out one of the positions. I think I should still be up in one. I closed out the one I used big lot size. Gee, you've been messing up. I think I closed that one. I'm still how many pips in profit? See, this was where I got in.
That's blessed.
This is where I got in. So we're around 150 pips. But and the pay is not that much. So this is my take profit.
Your take profit is all the way down there?
Yeah, all the way down here.
That's beautiful.
Yeah, I think it's still gonna drop 400 pips more.
That's a big move.
Yeah, but if I see a rejection here, I'll close out. If I get a rejection there, I close out. So GG. So that is it for ABCD patterns. You want to look for AB, a valid retracement. Same thing. Let's go over some examples so you get what I'm talking about. I want to show you something here. You see this? The market is going down. You don't want to counter the trend. Look at this ABCD here. AB equals to CD. You see the rejection here? What happened? Because it's the counter trend.
Yeah. Why would I be trading up?
Heat. Yeah. What you should be looking for in this market is a way to get back down, to get back in the trend. Not trying to counter the trend. See what I talk about? A counter trend, never trade counter trend. This is the clear ABCD. And what happened? Look like it's going to go up, move around 28 pips, and boom, it got hit. The stop will be around here, around this side. So it got hit. So ABCD are like my favorite patterns to trade in the market.
Oh yeah,
I love ABCDs.
That's your favorite one?
Yes, it's one of my favorites. 618 head and shoulders and 618 head and shoulder ABCDs and with the trend.
I remember when I was first learning that I was just taught to trade candlestick reversal patterns. I got my ass handed to me, man. So it's confirmation after confirmation. Those EMAs are blessed. The Fibonacci retracements are blessed.
Yeah, Fibonacci, the golden ratio, 618. You can see 10 and to play out 10 out of 10. I promise you that. Like you see 2 weeks, like 2 weeks ago, we did over 1,000 pip. Only off trading 618 retracement, over 1,000 pip. You see this? This is the counter trend. AB equals to CD. I see this. But I think it's a counter trend. Though it did play out a little. See? Hit 170, then it dropped. But here's it. This is where we get blessed. No, not here. Sorry, my bad. This is where you get blessed. This is 1.8. So I don't know if anyone have any question on with the ABCD patterns.
I don't think anybody has any questions. I know Alan, who hopped on the call, and he's really good at trading. He was saying that for ABCD patterns, he tends to use the bulk of the candle. Are you talking about like a full candle and not the wick, Alan? Is that what you're saying?
Yeah, I tend to exclude the wicks because when you trade ABCD, it will never be like perfect.
Okay.
If you know what I mean. You have to have an area where you start to search for rejection, like you said.
Okay. So basically, just like the example he was showing, it's like a zone you look for.
Yeah.
Okay.
And if you see rejection at that zone, go for it.
Okay.
Exactly. So we're good now?
Yeah. For the breakouts. I mean,
yeah,
for ABCD, yeah.
Yeah. Let's go over head and shoulders. If you focus on this, if you focus on ABCD, the 618 retracement, break and retest, head and shoulder, the list you should be doing every single week should be 300 pips, 400 pips every week. That should be the list. The list trade, your list pip count should be 300, 400. Sometimes you do 1,000 in a week.
Amazing. I know. I've seen you do thousands a week, bro. I've seen it.
Yeah. Such weeks you make big bangs.
Oh my goodness.
Yeah, so let's go over the head and shoulder patterns. Head and shoulder. As always, never count the trend. If the market is on the downtrend, you see it coming down, and retrace back up, like this. What you want to see is this. Wait 1 second. Let me open a new chart. GG chart window.
What do you use the TDI for?
Yeah, I use it. There's what I'll show you. I use shark fin. It's called shark fin blood in the water. When I get that shark fin, once an ABCD pattern is complete, I start to look for extra confluence, and I'll show you how I do it. Hold on 1 second. Let's go over this head and shoulder. Market is on the downtrend. Market retrace back up a little, like this. Then you should be looking for a head and shoulder, just like your head, your shoulder, and your left shoulder. The head, your left shoulder, and your right shoulder. That's how it works in the market. You get something like this. It should be your left shoulder, and your head. It should be cow's head, man. And your shoulder, left shoulder. Yeah, this is the head and shoulder pattern. The head, the shoulder, the head, the shoulder. So this is how the head and shoulder work. There's usually something called the neckline, which is usually here. So if you wanna get a profitable ABCD pattern, like if you want to have a profitable trading ABCD pattern, you want to wait for the break of the neckline. But me, I usually get in here. If I get a rejection of the right shoulder, when I mean a rejection, if I get a rejection of the right shoulder, I get in there. I don't wait for it to break the neckline. If it gets to the neckline, if it breaks the neckline, then I should be up good. And if it does not break the neckline, if it's coming back up, then I'll scratch out or I move my stops and profit. So this is the neckline. If it breaks the neckline, it comes back, usually comes back to retest. Take you with pins to the upside in a continued downtrend. And it goes the opposite way. This is the head and shoulder. There's still an inverse head and shoulder, the opposite. So it works like that in the market. So let's hurry up and check if we'll get any head and shoulder in the market. Head and shoulder. Head and shoulder. Yeah, I'd have to get an ABCD pattern. Let's see if we get it. Look at this one, but this one is too big. Let me look for something clear. Again, I can't find it in the market. Yeah, it's not really clear. I will look for something clear. Even this is an ugly head and shoulder. Shoulder, head, shoulder, reverse. I want to look for something clear. Boom. Yeah, if you don't know technicals, you can't take this one. Let me just do away with this one. Looking for something very clear. Yo. You see this? But this came too close to the head, but the head is still higher. No, I want to use that. There's one I traded on the 4 hours not long ago. Oh, why is this taking like forever? To find one solid head and shoulder. All right, this is an inverse head and shoulders. Let's take this one. You see this? Shoulder, the head, and the shoulder. Yeah, I get a lot of questions when people ask me where do I place my stop loss if I'm taking head and shoulder. The right shoulder, that's the left shoulder. This first one here is the first one that formed. So the price must not close below. It must not close below the left shoulder. The right shoulder must not close below the left shoulder. The first shoulder that formed, the second shoulder must not close below it. It can wick, it can pin to the shoulder. You can pin to where the price rejected here, and you can pin to the right shoulder, and pin to the left shoulder, but it should not close below it. So, and your stop loss comes slightly below the first shoulder. This is shoulder, head, shoulder. And what happened? In that, the market goes up.
When you're looking for head and shoulders, is there any type of measurements, Fibonacci's, any type of measurements with it, or you just see the actual pattern?
I just see the actual pattern. I take it. It's one of the most reliable patterns.
Right, and as long as the palette.
If I'm trading head and shoulders, yeah, there's something I'm even looking for short. Should be NZD cat. Let me see. Student of mine pointed it down. NZD cat. H4. Oh shit, be dropping. I missed the entry. I'm just so mad. I was waiting for it to get there, but I missed the entry. See this? 61.8.
No drawdown.
No drawdown.
Because you see that
pattern. I'll get in here after this doji. That is where I get in. Then by now I should be in profit. No, you see this is 1.8, and if you go to the H1, the 30 minutes, we got head and shoulders forming. Shoulder, no, it's not really clear here. Shoulder, head, shoulder. So I think this would drop. This should drop. But this would have been the reason I keep telling you to get a good entry is this. Excuse me. If you get a good entry somewhere around here, right now you just move your stop to break even. If the CAD news hits, if it goes in your favor, you bank. But if it goes against you, you got stop out with little profit. Get stop out with little profit. But I think this will drop. But I don't want to get in late. It's already late.
I got you. Discipline.
Yeah, so I don't want to get in. 618 retracement. It should be a projected 100 pip drop.
I got a question. After that doji, there's that bearish red candle. You would wait until that red candle closes, that first red candle closes, right?
Yeah, I can get in here because anytime I see this forming, I believe it's an infinite star. This is an infinite star, these 3 candles. So if I don't get in here, I'll wait for this red candle to close, then I get in here.
I got you.
That'll be late entry for me. All right.
When you say doji, Carl, you mean where the T crossing is at the top point on that when it started going down?
Yeah, that I have a file, right?
This is a doji.
That's a candlestick reversal pattern, bro.
The candlestick reversal pattern.
So I'll give you a sheet that you could print out and put it around your computer. And anytime you see those reversal patterns, just know that there's a high probability it's going to turn the other direction. So what he's looking at right here is multiple confirmations.
Right.
61.8 retracement, that's clue number 1. Doji, reversal pattern, clue number 2. Red candle closes. I'm in the trade. It's a trend. It's a downtrend.
Exactly.
So those are that's why you gotta wait for multiple
rules. Yeah,
it's the rules, bro.
Yep.
It's the rules.
That's why you're gonna wait for multiple confirmation before you get in the trade.
And these are simple confirmations.
Don't want to get in just like that. Yeah. Just don't make trading complicated for yourself. Just make it simple. Look for 5 patterns you want to trust. You want to see every time in the market. Go to the market. Go do some back testing. Check things out. Know how the market have played out. You can back test for the next, for the last 10 years and see what have happened in the market.
All right, be right back.
Yeah. Well, after back testing, then you can get back in and start looking for those patterns and start taking them. So let's go back to the.
Chris, you still looking for a head and shoulder?
Yeah, no. I think it's clear. Y'all understand head and shoulder, right?
Yeah, I am.
Head and shoulders is where you got like three different times when it go up and down, and you got 2 next to it, right? Next to the house.
Yeah, just like the way your shoulder is. You see your head, you see your shoulder, and your shoulder.
Right.
You see this? This is an inverse head and shoulder. There's a head and shoulder. There is an inverse head and shoulder, the opposite of head and shoulder. Look at this. Shoulder, head, shoulder. The left shoulder, you see, the price of the left shoulder must not close below this one. The price of this place must not close below this place. If you start to get rejection anywhere here, you know it's confirmed. You get it? Do you have any question? Yeah, look at this. This is just so perfect, just like the example I gave. See? Oh, all right. Look at it. You see this shoulder, head, shoulder. You see this is the neckline. It broke the neckline, came back, retest. This is another opportunity to get back in the trend. And if you're smart enough, you would have seen this. If you're smart enough, it should be good here. This would have been your entry. While others are waiting to get in here or the retracement, already up here. So look at this also. Shoulder, head, shoulder. The upside. So, but whatever you do, don't forget, never counter the trend. Always trade with the trend.
That's rule number 1.
Exactly.
Literally rule number 1.
So we've gone over Fibonacci, the head and shoulder, the ABCD, A equals to C, AB equals to CD pattern. Do you have any question about that?
Can you do the Fibonacci again? I want to see which way you draw it. Do you draw it from like a second pullback or from the top of a trend to like the first pullback?
Yeah, I draw it from an impulse leg. I want to do the trend before I draw Fibonacci.
Yeah, because when I just tried to do it, my Fibonacci's came up upside down.
Yeah, look at it. You draw. Look, this is the high, right?
Okay.
Yeah, I draw from here down to this place. This is the low. This is the first low here. What do we have here? It's 1.8. Downtrend. Fibonacci.
So what if there's a second impulse leg? You don't do the second one, just the first one?
No, just the impulse leg. This is the impulse leg.
Right.
Call this impulse leg, yeah. So this is the top and this is the bottom. This is the high and this is the low. Fibonacci is drawn from swing high to swing low or swing low to swing high. From the high to the low or from the low to the high.
So that middle leg right there, you wouldn't even touch it.
Yeah.
Below it.
That
one right there. You just leave that alone?
Yeah. Hello?
Yeah.
You mean this place?
Right. So I'm saying from that low to that high, you would just leave that alone?
Yeah. Look at this. Look at this. Look at this. This is the next high.
Oh, okay. That's what I was asking.
Yeah. I see. It's a lower high.
The lower high. You see this?
Yeah.
It still comes back to 61.8. That's nuts.
My laptop is down. Battery. Power is out.
That is nuts, bro. What the heck? So you go from the high to basically a lower high. Okay. Is the market still open right now? Of course.
Yeah.
1:30. Can you go to a live, like go to the far right and let's see if we could find one of these on a live chart.
I already got one. Well, you know what? It's on a daily, but you could go to an AUD, USD.
Yo, Prince, when you hear us, I think his screen froze. Sure did. All right. AUD, USD. Yeah, let me pause this recording. Yeah, talk to us with the institutional language, bro.
So in liquidity pools, what is it? Is above daily highs and low and below daily lows, there is two pools, a 10 pip pool and a 20 pip pool. So for both pools, I place a zone and I place a line, and I see what happened, what rejection the price make around those pools. If there is a rejection, it means that the trend is going the other way for the day.
For the day, and this is what time frame are you looking at?
It's a M15.
Okay, 15-minute time frame for the day. Wow.
So for example,
okay, go ahead, bro. Go ahead. My bad. Go ahead.
I have my two liquidity pools. So here you see there is 10 pips above the high of the day and 20 pips above.
Yeah.
So when it gets to the 10 pips, I don't see any rejection from the 10 pip level. So for me, it's a trend continuation, and I still take the uptrend.
Okay.
So if you are trading in an intraday basis, because on the same day I can trade three times the same pair in 3 different ways.
Wow.
So for example, so London Open, it breaks the structure. So let me just remove the ray. Okay. So the structure is broken. As you can see, it goes higher. So from now on, I'm searching for order blocks to have a re-entry. So I search a retracement back. So my order blocks is what? It's a concept I learned from some videos I came across a long time ago. It's like a fractal, but with 3 candles instead. So I search for a candle with a lower low than the 2 candles around it. So basically, before it broke the structure, the 3 candles pattern here. This candle, the blue candle, is lower than the 2 candles next to it. So basically, what I'm looking for is the bearish candle before the bullish move, and I place a zone exactly at that, and that's where I'm going to hunt a trade. So when I trade, I like to use the term hunt because it's a hunt. You search for a specific price and you shoot there. And I place my Fibonacci from the low of the Asian before the London time move. And I place a Fibonacci to the bulk. And what I'm searching for is always my 70.5 level. As you can see, my 70.5 level is exactly here. That's where I buy. I place a buy because it's inside my zone.
Now you draw your fibs from the swing high to the swing low as well.
Yeah.
Okay.
So basically, but I take the bulk of the candles. It's the body.
You take the actual body of the candle itself.
Yeah. Because that's where the majority of the volume of transaction is.
Okay.
Once that's done, I have my entry at the 70.5. If the 70.5 is not reached, as soon as it leaves the 61.8, I open a trade manually. So basically, I have my entry that you see here. And my take profit should be my second liquidity pool below the 10 pips, above the 10 pips, the 20 pips one, because the 10 pips wasn't rejected. So my take profit is basically that line that you see here.
Okay.
And once that happens, I watch. As you can see today, once it broke the 20 pips, it rejected it pretty fast.
Very fast. That's on a 15-minute chart.
So once there is a rejection, I do the week off my market cycle thing. So basically what I do is I want an up move after the rejection, an up move right here. Then a down move that breaks the low. I will take that low as my so you see there is a break in structure. And once that happens, I use the same principle I just told you about, the order blocks. So there is 3 candles. You see that one and the next one that are like that. And I take the last bullish candle before the bearish move. That's my area of hunt. I take my Fibonacci level and I enter on the 70.5. But this time, as the move is smaller, I use the wicks.
You use the wicks because it's tighter. Okay.
During New York time, I use the wicks. During London time, I use the bulk.
Okay. 70.5.
Wow. 70.5 just here, and what you can see, it correlates with my 10 pips liquidity pool level.
Crazy. Your stuff is institutional and technical as heck. So it holds to the numbers perfectly with math.
Yeah. So basically, you will ask me what 70.5 is, because it's not a regular Fibonacci level.
Right. What is 70.5?
You know, institutions like to have round numbers. So basically, I took my area of hunt, the Gartley area, so 61.8 to 78.6.
You added it and divided by 2, didn't you?
Yeah, but I used 62 and 79 instead.
Because you rounded it up. Okay, cool.
Yeah, and I added them and divided by 2, and it gives me 70.5.
Wow. Okay, got it.
And so that trade is open at the 70.5 level. So just here. My stop loss right now it becomes my second liquidity pool because the week off cycle is complete, and it's not going down to, it's not going back to that pool. It's not going to break that level again, so my stop loss is there. Of course, you have to take in account your spread because when you sell, you use the ask price.
Yeah.
And my take profit, that's where it gets funny. I use the wall move leading to the pull and the rejection from Asian session. And with the bulk of the candle to the highest candle you can find with the bulk, I stop at the 127.
That's your TP.
That's my take profit. So basically my take profit stands right here. So it gives me intraday trade. Wow, I did the take profit. Wait a minute. It gives me a trade with in an intraday basis with some ratios like this time I think it was 5 times my risk, 10 pips risk for 50 pips, 43.5 pips. So right now you get a low risk, high reward trade.
And that's all we want to look for. Low risk, high reward. That's beautiful.
But if you want to speak about institutional levels and stuff, my main rule is you should never trade like the retailer. So you should have a counter retail mind. What does it mean? It's your entry should be where everyone's stop loss is.
Say that again out loud, Alan. Oh my God.
You have to search where everybody will search to place their take profits or their stop loss.
Oh my goodness.
Let's look at a chart. For example, you see the up move, okay? It's a 4-hour chart, so it's more on a swing trade basis. Check that. You have the up move starting here with the structure broken right here. So structure broken, you see it. That's okay, up move. So what most people do is they place their entry with the Fibonacci like everyone else.
Yeah.
And around 61.8, 79, we're good. That's where we enter, okay?
Right.
But see what happens. When you have that kind of level formed, and the structure is broken, is starting to rise, what people tend to put there? What's your first thing you think when you have that level and it gets broken down below?
Stop loss.
It's a stop loss, but it's also a sell stop for most traders. If you know what I mean.
Yes.
So check what happened. First, the market did not reach that level. It gets rejected, and it comes just below that one.
Yeah.
So basically what I do, everybody is either selling there or their stop loss is getting hit. When it goes below, I have a buy stop placed exactly at that price.
Yeah.
Why is that? Is because when you look on a higher time frame basis, it's an up move, and it was a compression phase. So of course there will be some breaks out and stuff like that. You will see some swings, but that's not significant in the higher time frame basis. And the banks never trades based on H1 or lower time frames, you know.
Mm-hmm.
That's why you should always have a higher time frame basis and see what the market is doing currently, what it's been doing for the last, let's say, 4 weeks, and have your objective set like that. But you should go with the trend with a counter retail in mind.
With a counter retail in mind. Amazing.
So you search stop hunting, going with the trend. You have to search an area where it was rejected, but the market is trying to take that down, but it's against the main trend. Let me write it down because it gets confusing. I'll write it down on, so first, higher time frame bias. Second, you have the lower time frame rejection. Then you have the trade decision made by most traders. Then you have the stop loss zone, what I call the stop loss zone. And that's where I start to hunt for a trade.
That's amazing.
So saying that, let me show you another thing you can do on your chart to decide the bias in a short-term, in an intraday basis. So let's just watch the daily chart of GBP USD, for example. You see my pattern of 3?
Yeah.
I just told you about, so the kind of fractal. There is 1 year. Basically, when a pattern like that is complete on a daily chart, I try to buy the next 2 days.
Okay.
So there is a candle, a lower one and a higher one. So the middle one has to be lower than the 2 above. And what happened is that I am searching to buy the next 2 days. So my advice to you is when you start, don't try to have the retail mind and trade the whole move, you know?
So don't try to trade the whole move? Is that what you're saying?
Yeah, don't try to trade the whole move because trying to anticipate the lower level of the day will be very hard if you start.
Yeah, that makes sense.
So basically, yesterday and today was my 2 days to search for buys. I was searching for buys there. So if you try to open the lowest point, most of the times your stop loss will get it before the trade match you. So what happens? You let the London session go on and you hunt in New York. That's the safest way to do it when you start out. So what I do is I have my London session that broke the highest level, that's okay. So the highest level is broken. I'm waiting for buys. So basically I will take the lowest order block, so the 3 candles that happened before New York. So that's the one with the lowest bulk. So I take that candle, the latest bearish candle before the up move, before that structure got broken. You see it?
Yeah.
So I take that latest candle, that bearish candle, wicks and body, and that's my hunt zone. That's my hunt zone. And then I will search for another block that's lower, that happened before, to place my fib on.
So question, that green area that I had stepped away for a second, but I'm looking at here. The green area is where you would have caught your entry point.
Yeah, it's the zone where I search for an entry.
Okay, but would you have determined that it was about to reverse based on those reversal patterns right there in the middle?
The reversal patterns, I don't use them because I don't trade candlestick patterns. My trading is only based on ratios and structure. When you look at the daily charts, that's the only thing you should be searching for candlestick patterns, and that's the fractal of 3 candle.
Okay.
That's the only candlestick pattern I'm looking for. The railroad tracks and everything like that, that's just noise in my eyes. Because banks don't trade figure, they trade numbers.
Who's laughing? Fanita?
Cassandra.
Oh, it's Cassandra. Because it makes sense what he's saying. He trades like a bank does.
That's crazy.
So you see, that's where I under trade, so that order block. And what I will tend to do is, I like to have the lowest price broken, of course. So that's a first confirmation for me to have a good entry. And the second point is I draw my fib from the latest order block. In that case, that's for a hunt in New York, so I use the wicks, like I told you.
The latest order block.
So the block that you see right here with the 3 candles is lower. That's the one lower than this one. And my entry point will always be 70.5. That's right here.
I got a question for you to clarify.
Yeah.
I know that I'm going to ask this again, but if I watch this video 800 times, I will never ask you again. How do you know what an order block is? How do you find it? And what did you mean by free candle? Or am I saying that wrong?
Okay.
It's 3 candles, not
3 candles. I got you.
So, for example,
on peut parler en français aussi, and you guys won't understand a thing.
So the order block for me is when you are in a bearish scenario.
Okay.
So in a bearish scenario, you search for 3 candles.
Okay.
With the highest high of the middle one higher than both candles on the side.
Just how you drew it like that.
Yeah.
I got you.
When you are on a bullish scenario, you search for that kind of candle pattern. So the 2 candles next to it are higher
than the one below.
Yeah.
The one in the middle.
And the order block, what it is if you are in a bullish scenario, it's the last bearish candle before that middle one.
I got you.
And if the middle one is bearish, it's the middle one.
I got you.
And if you are in a bearish scenario, it's the last bullish candle before the drop.
Before the big drop.
Yeah. So basically, that's the order blocks. That's just the candle area.
Okay.
So, for example, for here, the previous order block for me is that last bearish candle before the rise.
Now I understand.
So right here, I place my fib from the lowest point to the highest point, and my entry is the 70.5. I stick to that every time. I never try to take in the 61.8 or the 78.6. I always use that one because it's in between them. You never know if
it's the middle of both of them.
Yeah. You know you want to hunt in that area, but you don't know exactly where in the area. So I take 50% of the area, and most of the times
This came perfect after what Prince was saying. Okay.
So right now that you have the 70.5, you have your entry point. It's right next to the lowest close. So basically, my stop loss will be at the 100 of the fib. And my take profit, that's where it gets interesting. You see the candles?
Yeah.
So those the three candles pattern. What's the next high of the day to be reached? We are in a bullish scenario on a daily chart. So the most logical thing is for high of the day to be broken. So we're trading that day with the red line.
Mm-hmm.
The next high of the day to be broken is that one of that red candle.
Okay.
So basically, I place that line, and you have where I would end. So let me place the perfect price, 791. That's it. So when I go back in my 15-minute chart, that price is my take profit.
Wow.
That's the next high of the day to be broken. So
Can you say that one more time? I'm sorry.
What?
Never mind. It'll be in the video. Never mind.
I'm recording it, bro.
So your ratio for that trade would be a stop loss of 8 pips, 8.2 pips, and a take profit of 75 pips.
So basically, the order block of the low, the one before, is your stop loss, and your take profit is the next daily high.
Yeah.
Got you.
If the daily high is way too high, I would use the Fibonacci levels to determine my take profit.
And then you would go for 127. My bad.
Yeah, most of the times.
Okay.
I use either 127 or 161.8.
Okay.
So for the next day, so basically today, I showed you how I would take the trade for uptrend.
Okay, is GBP USD, yeah.
So is there any question on something you didn't get from my technique, my main technique for intraday?
Anybody? Anita, Woods, Cassandra right now?
Nobody?
No.
What do you say? Questions?
Yeah.
Oh, okay. No.
I think we're going to be able to watch this and study it and implement
I'm gonna be watching this. I'm gonna be watching this religiously.
But you see what I was saying, what Prince was saying about the ABCD patterns, you know?
Yeah.
Is I tend to look at the bulk of the candle. So
yeah, the full candle itself, not the wick.
Yeah, and I would switch to place it to the bulk and start to hunt in that area. So, for example, just watch that one. Instead of drawing lines like that, you can just place the fib expansion tool. And the 100 is basically the projection. So I use the bulk of the candles.
And that's I'm gonna write this down. That's using the Fibonacci extension tool. There's multiple fib tools. Fibonacci expansion tool. Okay. To draw A, B, C, D.
Yeah, and I project the level onto the bulk.
Okay.
So lowest close or highest close. And as you can see, if that one wasn't quite a regular ABCD.
But you were saying that the 100 area is usually the D of the structure.
Yeah.
Okay.
In fact, I want to see rejection at that point. Even if it goes higher, I want to see it rejected.
Okay.
So because, like I told you, you will never find a perfect harmonic figure. That doesn't exist. There will always be like some legs shorter than others and some ratios not the same every time, you know?
So with a harmonic pattern, you're never going to get an exact ratio. It's just a zone.
Yeah.
Ding, 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 ding. For everybody using that harmonic scanner. Ding, 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 ding. Wow.
And
It's never an exact pattern.
What?
Well, you say it's never an exact pattern. What?
Now, what he's saying, and Alan, you're very confused too, right? So the company that we're with, iMarket Slab, there's a harmonic scatter that draws out harmonic patterns, Gartley, crabs, bats, all that, right? And basically, from what you were just saying, Day, what he's saying is there's never going to be a perfect harmonic pattern. You're just going to trade a zone.
I have my own harmonic pattern scanner.
He said he got his own scanner. He got his own scanner.
That boy got the sauce.
He is the sauce.
So, for example, lately, you can see that one.
Wow. So, okay, I see this. That's a Gartley, right?
Yeah.
Look, I didn't even have to look at anything. I know that's a Gartley.
Not really. It's not a Gartley because it went higher on this one. So it's a cipher in my opinion.
Okay. I got excited for no reason.
Yes, but you can see that my pattern tells me that there is 3 levels to watch. So that first level, that second one, or that one.
So that's a whole zone to look for.
Yeah, and the zone that got really rejected is that one.
Now, what did you use, Alan, to bring that up? I'm sorry.
I think he got his own tool.
Yeah.
Yeah, let me get that, Alan.
Okay, I'll send it in the group. There is no problem with that.
Okay, I appreciate it. I'm just messing with you.
As you can see, with the long time I spent in the charts, it's like more than 8 years.
Yeah.
I have a bunch of indicators.
So, Alan, you kind of trade. I see you have IC markets up there.
Yeah.
So, did you go through that? Is that kind of how you trade?
Yeah, that's where I trade. I have my live account on IC Market. I put a demo so you don't have my account number on the screen.
Word.
I got you.
So, but anyways, yeah, IC Market, I trade with them because I like to scalp.
Yeah, he's a scalper. This man goes all day long scalping the market.
I love scalping. So,
I scalp 2 pips move, so I need a very low spread. And most of the times during high activity times, my spread is around 0.2 pips.
So they have very low spread.
Yeah. So my scalping strategy is that one.
His scalping strategy doesn't even use candles, y'all.
Yeah, the candles are just noise for me. I don't like candles in patterns because most of the times it's a binary options mine.
Right, gotcha.
So for example, I would search for a trend. So below my moving average, I would search the price in that channel that I have on my chart. So and across on the stochastic. That's a very simple strategy, but I just aim for 2 pips move, but I do it like 40 times a day. So
that's amazing.
So in the end, it's like 80 pips. So I don't mind. And I showed Carl this last time. With the 2 pips move, I got a pretty perfect.
Your winning ratio is flawless.
Yeah.
You don't lose.
But you know, I have something to say about losses. It's very important in your learning curve that you have losses. So that's why you should demo and trade. You should get good habits. The first thing to get is good habits. That's why when you demo on an account, never take a demo account of 50K for saying. If you take a 50K demo account, that's not reflective of what you will do.
That's real.
If you want a demo account and you are going to invest 1,000, invest 1,000 in the demo account.
Exactly. So it mirrors basically your real life.
Yeah.
It's emotional. And you got to treat it like it.
Yep.
So if you have a demo account of 1,000, you treat it like it's real money. You take good habits because it's hard to break a bad habit.
Mm.
If you lose, you should never lose more than 5% of your account in a day.
Wow, that's amazing.
And that's if you're aggressive.
Even if you're aggressive, never more than 5% of your account in a day.
No, if you lose more than 5%, just close everything and go to sleep.
Yo, I never really saw it like that. That's great mindset training.
And the thing is, I have losing days, but that's okay because if I risk 5% and I lose it, my risk reward, that's the most important thing after the money management, is the risk reward. If you take a trade, what you lose should always be way lower than what you earn. So if a trade doesn't give you at least a 2-to-1 risk reward ratio, don't take it. If your expectation for the take profit is not twice bigger than your stop loss, never take the trade.
Never take the trade.
Because it's not worth the risk. If you're risking 5%, you expect to get 10% in return.
Or more. But at least 2-to-1.
Yeah.
Hey, Alan, so for those sessions, is that an indicator that automatically does it, or you draw it out, those rectangles for the London?
It's automatically done. So
I think I have
that. This one I use is called kill zones. And this one is just a Asia session indicator.
Yeah.
That's beautiful, man.
When you're starting, never have a chart that's stacked with indicators and stuff like that. Keep it simple. Trade price, don't trade indicators.
Trade price, don't trade indicators. Y'all hear that?
Because I have to talk to you about some things. Some of you may know I made my studies in finance and banking.
Mm-hmm.
So how it works is there is something called the black pool. So what is the black pool? On your brokers, they get the price before you. It's delayed. Even if it's half a second, it's delayed. You never get the last price at the exact same time. And what they do is they see you use an indicator, and to make your indicator have a cross, for example, if you use the stochastic.
No way.
To make the indicator have a cross, what they do is they delay the price just enough for your candle to close with the cross.
Oh my gosh.
And that's why there is no real indicators that works in the long term, because once they find your indicator algorithm, that's over. You're in the black pool.
Wow.
That's why you should always take the price, because it's algorithmic. Once it reaches certain ratios, it will always fall back in place. So anyways, but that price action trading is the only real way to make money on the long term if you don't have those massive computers.
I agree, man.
I know you said that scalping, you like scalping most. But
I like it, yeah. But you have to keep in mind that I keep modifying I keep modifying my settings when I see some delay in the crosses and stuff like that. I don't have always the same settings, and from one chart to another, I have 2 different settings.
That comes from experience.
So those only 3 pairs you trade down there?
No, that's only to keep my my CPU low.
Okay. So what you think about that AU? Well, I mean, I think it's a buy.
Which one?
Odd USD.
Okay, so AUD USD, you think that's a buy right now?
No.
Well, it just,
Look at that wick. Oh no.
well, that just went down like that. That just happened.
So why would you buy that?
I already made money off of it.
Buying it?
Yeah, you see that uptrend right there? You see that trend right there line?
Yeah.
I hope you closed it.
But let me show you an application of the strategy I talked to you about a bit earlier. You see the London session broke the high structure, so it's a it's a buy scenario.
Mm-hmm.
So what I do is I take my order block in London, and that's my end area for a trade, for a buy trade in New York.
Yo, that's crazy. That's just that's simple. That's okay. Now I get it, bro, because you just did it again live. So
Yeah.
You go with the order block from the previous session and you mark it up for the entry for the next session.
You have to know that there is an overlap in New York session and London session.
Yeah, that I know.
And what happened during that overlap is that the computers from London sends the daily objective for the computers from New York.
Daily objective.
If the objective is not reached, and that's where the liquidity pools I showed you is very important. If the objective is reached, the liquidity pool is rejected. If the objective is not reached, there is no rejection at the liquidity pool. The move is going to continue. And once you have that, you take your order block from the London session. You choose the closest lower order block that you have before. So that's that one, basically. You place your fib from the lowest point to the highest point. 70.5 is my entry most of the times. It didn't get reached. So what I told you is once it gets in that area, if it goes out of the 61.8, I enter manually. So once it breached that one and went again inside, I would have entered here. I have a buy stop placed there. So anyways, and I do it the reverse way. So I take the bulk of the candles this time and I search for my 127. Just here. That's my take profit. And my stop loss, of course, is the 100 of the previous block. But as you can see, that's a trade I would not have taken. You know why? There is not a higher ratio of risk.
The risk to reward ratio is not big enough.
Not big enough, no. It's easily reached. It's an easy trade, but there is not enough reward for the risk I'm taking.
And that's a reason to stay up. I agree. Okay. So
when you are about to take a trading decision, always look to your risk and reward. Don't have a trade objective, a take profit too high because it's just clouding your mind. You have the 127 is more than acceptable because most of the times it goes to 161.8 or higher when you are in the trend. And the next thing is you have to see that the higher bias it was a lower a bearish structure because that one was broken. When you look at bigger waves, so mostly you could find a harmonic pattern there going lower. So 127, it's okay. Sometimes I even take profits at the all high. The last trade I gave you Friday, I think. It was what pair again? GBP AUD.
On Friday.
Yeah, last Friday. Yeah, I think.
I think it was GBP JPY and closed out.
Oh no, GBP CAD.
Oh yeah, it was GBP CAD.
It was GBP CAD. Basically, on the Friday, what I told you is to take profit at the lowest close of the bulk, the 300.
Oh my gosh.
That's where I told you about the take profit, because lower than that, that's risky.
That is risky.
It depends on the day. And you see what? I could have took my 127 with the bulk, like I just showed you. But check what happened. 127, then it reversed, never goes lower. That's why you should have always a reasonable expectation for your trade. Never go too high or try to make the market more than you should.
Amazing.
And about this one is good to show you another example of place your entry where everybody have the stop loss. Okay, so stop hunt in London session, it goes down, break the structure of the Asian. You see that?
Yeah.
Check what happened. It went and broke the high.
They took everybody out.
Took everybody out, even if they were right, to go lower. That's exactly the week-off market structure definition. To everyone starting, you don't need much to learn. It's I will name them in the chat. It's week-off method, Gartley ratio trading, and Elliott waves. That the three most important concepts.
Elliott waves. Talk to me, bro. Talk about those Elliott waves. Because those Elliott waves are crucial when you're trading cryptocurrency.
Yeah.
Crucial.
When you trade, you have to have
time in crypto.
Mm-hmm.
So the Elliott waves, my main problem with that, it's a lot subjective.
It's based on speculation, right?
Yeah, it's where you decide to see a wave.
Whoa.
And that's where I have my main problem with Elliott wave. Because some people would say, okay, that wave is the first wave, okay?
Yeah.
But some other people will say, no, it was the accumulation and that one is the first one.
I got you.
You should understand what I mean.
Yeah,
so
I got
basically, what I do is I search 3 waves already completed. It's only to go in a counter retail mine because I don't search to go on as the first wave is already declared.
I got you. So when you're looking at Elliott waves, you're more so looking to sell on the retracement, not on the buys.
Exactly. And what I'm looking is a higher time frame sell bias and lower time frame bullish Elliott waves.
Mm.
You have them here. Just wait a second.
Mm-hmm. Are you guys getting info overload right now?
Okay, so.
But I'm gonna be watching this over and over. It's all good.
So just check this out.
All right.
When you see on the daily chart, you have a sell scenario right here, okay? We're at the 61.8 on the GBP CAD.
Right now we're at the 61.8 on GBP CAD.
Yeah.
Okay.
So Basically, you have a sell scenario all in that area.
That whole zone between 61.8. Because look, you trade 70.5. Trent says 61.8, and we have a friend named Wallace who trades 78.6. So that whole zone is a sell zone.
Yeah.
Okay.
So you have a sell zone. So I will delete the fib, just not to have too much.
Mm-hmm.
And when you go back on a 4-hour chart, just check that. You see the latest waves? There is 3 waves.
1, 2, 3, yeah.
You can count them clear. 1, a second one, and a third one.
Yeah.
Okay. You remember what I tell you about the bulk of the candles?
Yeah.
What I like to do is I like to take the first wave and apply it to the third rising wave.
Okay.
So I take the bulk, so right here, and I move it exactly to the bulk of the candle.
Amazing.
So right around this price, let me place it. I will start to search for sells. So I go on a lower time frame basis.
And
I
start
go
looking for
a
sells.
15-minute chart, let's say, and check what happened.
Oh shit.
And you will love the liquidity pools because of that. Wait. You see, yesterday IG was that one.
Yeah.
So you place an area of 10 pips. Let me place it exactly at 10 pips. So 3, 9. Okay. And you place another one
For 20.
for 20 pips. Let me modify it so it's exactly 20 pips. So 589 is the 20 pips price. And that's my liquidity pool.
Mm.
You see that price?
Yeah.
Check the first time. Touched, rejected.
Came back up.
Came back up.
Wick.
Above it. Wicks, never finished above.
Oh man.
And that's the liquidity pool. That's what it's all about.
Oh man.
So right now you have it. It's rejected. You inside your area for a sell trade. Once you see that zone broken, we will have to go on a 5-minute chart because I want to show you that with more depth. It's you see, once it rejected the liquidity pool, you have a break in structure right here. It breaks that. So you have the order block, the last one before. That's my end zone. I take an order block just above. So basically that's this one, the highest one. So I place my fib from highest to lowest.
71.5.
70.5. That's my level of entry. Check where it is.
That's beautiful.
What's my stop loss? It's the liquidity pool zone. What's my take profit? I have to say to you, if I were in a swing trade basis, you have that of risk for.
That's what I'm talking about.
Just check that because it's a long-term downtrend. You could aim up to that with 8 pip risk.
Oh my goodness.
Wow.
Did that just ring a bell? That just rang a bell. Dang.
And you see, every day of the year I take that trade, even if it takes 2 to 4 weeks to complete.
You said every day of the year, every same day of the year, you take that trade. The sauce.
But anyways, if you wanted to exit in an intraday basis, You just do as I do, is you take the bulk of the candles and you stop at the 127. It's easily reached. You have your trade, a good risk to reward ratio.
You know me, if I take a trade like that, I probably don't have the balls to stop at 127, bro. That looks like a big drop.
Yeah.
But you gotta lock in profits, right?
Yeah, that's for sure. And the thing is, you should have your swing trade opened and your intraday.
And your intraday.
And what I do is, even in a swing trade, I do some hedging. So what's hedging is, IC market allows it. You can buy and sell at the same time. So
that's what hedging is, when you're buying and selling at the same time.
Yeah, so basically what I do, even if in a swing trade I'm buying for a long-term trend, I could be selling intraday. Intraday, I could profit from some sellings.
Okay.
And what I do is I buy and sell at the same time and make money both ways at the same time.
Okay. I got a question.
Yeah.
For discipline purposes, do you have a certain pairs that you trade, or do you have like a rule where you won't take more than 2 pairs at a time or something like that?
My main thing is I want I use the major pairs. Okay.
Mm-hmm.
I would trade.
Those are the ones in green. I mean in yellow right now on your chart on the left. Yeah,
that's the major. What I do is I take a cross with any one of those pairs: AUD, Euro, GBP, USD, GPY, CAD, CHF.
I got you.
So any cross between those pairs, it could be CAD, GPY, it could be GBP, CAD, it could be GBP, CHF. But I will never trade another cross. So Euro with NZD, no, that's not for me. And that's because I'm searching for the most stable pairs. The one that have the most algorithmic patterns.
The ones that you can read the right way and you understand their behavior.
Yeah. Okay. So when you look at it, my main pairs, of course, are the yellow ones, but once in a while, I will search for a cross other than those ones.
Right, like Euro USD's cross is USD CHF, something like that, right?
Yeah.
Even though it's already on the list, but I see what you mean. Okay, that makes sense. And when you're executing trades, it doesn't matter. You'll take like 5-10 trades at a time, or do you wait for?
As long as you have enough margin available, there is no problem. My only condition is I never take 2 trades on 2 pairs correlating. So basically, you will say again, I'm a ninja, but I have the tools for correlation.
You're a ninja, bro.
So it's an expert. Let me just open it. Correlation. Do you see the new window that opened? Oh wow, it closed.
No.
Just give me a second.
Okay.
Spirit. Where it is.
Everybody's learning French right now.
I have a screen open. You see it?
No, it opens something else. I know why. It's because when you're doing the screen share, it's only sharing to the MT4 terminal.
Okay. Okay. So I will send you a website where you can have the real-time correlation tables.
Okay. Awesome.
And if there is a pair that correlates more than 70% with another one, I don't take the 2 trades. I just choose the most profitable one.
Okay.
And you have to know something else. When you have a money management, either you risk 2% on your stop loss, for example.
Mm-hmm.
You can make as much money on 10 pips as you can make on 100. It depends on your stop loss size. If you have a 10 pips stop loss and you place 2%, your lot size will be a lot higher. If you have a 20 pips stop loss and risk 2%, your lot size will be the half of the previous one.
Okay, I understand.
So either you have a fixed market, a fixed money management scenario. It's like you risk that number of lots depending on what you have on your account. Or you use the tool I sent yesterday, the lot size tool. Let me just open it to show you how you would use it. So there it is. You see it?
Yeah.
Okay. So your stop loss in pips, for example, if you want to risk 20 pips, for a cash value of, you want to risk, let's say $100 for 20 pips. So you press enter, you have to place 0.75 lots.
Wow.
If you want to risk 10 pips for $100, you will see it's 1.50 lots.
Whoa. It's a big lot size too.
Yeah. So anyways, so you should always decide if you want to have a money management based on your balance or based on your percentage of risk. So when I look at my money management, it's more like I want to have maximum, let's say half of my margin on a trade. I want no more than half of my margin on a trade, even if it's for less than 5% of risk. So that's where I'm going to lose some of you, but the leverage, you know what it is, you know how it works?
Yeah, I know how it works. I don't know if everybody here should know how it works.
So basically, if you have a 200 leverage, it means you can place a trade 200 times more than what you have on your account.
Yeah.
So in fact, on a 200 leverage, I will never place a lot size that take more than half of my margin, my balance. So for example, one lot on 200 leverage, it's 100,000 divided by 200. So it's 500 euros. If I have a 1K account, I have no problem taking one lot on a 200 leverage. But if I have 800 euros, you will never see me do that.
Okay, that makes sense. Because it's not smart money management at all.
Yeah, if you want to take 5 trades not correlating with each other, you take half your margin and divide that by 5. So is there something else someone wanted to know about, something I didn't show or something I showed?
Personally, I think I need to watch this whole entire thing over and over and over and over and actually use it, right? And because it makes sense to me, and I'm a hands-on kind of learner. I need to do it and see what happens. So I'm gonna do this on demo accounts. I'm gonna go on live accounts with small numbers, but I'm gonna use it. So for now, I don't have any questions.
Okay.
I don't know if anybody else has any questions right now.
So I don't know if Prince is back because he was showing some stuff and it cut.
Yeah, I think he'll be back on later on. He's over in Africa, so they cut the electricity.
Well, he had said that his battery died right before he cut off.
Was it
his computer?
No, it was electricity cut off, so he can't even get on a laptop. But I know his phone is probably still on. So he'll be on like probably tomorrow or later on tonight, Asian session or something. I don't think he's gonna be on within the next hour.
I think he was saying that he'd be down to get on at 3, like what's the name was it saying?
Cody.
Yeah.
So, anyways, I hope you guys had a good time learning. So
yeah, bro, I really appreciate that.
Really.
I gotta give Alan like a Christmas gift or something now.